moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Markets. This edition of the Moving Iron Podcast is brought to you by Dawsontire and Will, your premier ag tire and wheel provider in North America, helping people grow. Tractorzoom, delivering insights, and Dryshod Boots, the official work boot of the Moving Iron Podcast. Well, as usual here, I have got Shawn Hackett with Hackett Financial from Boca Raton, Florida, and Shawn is gracious enough to come on every week to talk about what he sees happening in the marketplace, as well as what's going on in everything that has to do with weather. And they're having no lack of weather down there. You need some of those Dryshod boots down there so you can wade through that water you got down there in South Florida. You guys can't seem to not get rain right now.
Yeah, it's been real soaker for us. Historic, quite frankly. So yeah, those boots would come in handy for sure.
Yeah, they're waterproof, so you're good to go. I mean, to a certain point, I guess when it gets up to your knee, you're kind of out of luck. But other than that, you're in good shape, Shawn.
Well, that'll work. So
right on. It might be a little warm. It might be a little more insulated than you need there in Florida. But other than that, you'd be good to go, Shawn. Okay. Well, Tuesday we had a good report come out, and there were some shockers there by the USDA. Not too many shockers if you listen to Shawn Hackett here on the Moving Iron Podcast. But you've talked about 174, 173, 172 bushels per acre is the average on corn right now, and the USDA came in just under the low end of the average, and they're like 174 and 0.8 or something like that. I don't remember the exact number, but it was right around there. Really shocked a lot of people. Market rallied around that. Did see some sell-off yesterday. Markets kind of had a bit of a move, maybe a little profit taking in there or something, but for the most part, the grain market as a whole, whether it's wheat, whether it's soybeans especially, I can't remember the last time I saw $11 beans on the board, and then you're looking at corn right now and what's going on there. Even cattle to that extent where it's been hovering in that 106 to 110 range pretty solid. It has busted through that resistance level, and it's shown to take off. Box beef is way up. So a lot of positive momentum right now in the marketplace, Shawn. So what's your reaction to that report, and kind of what's your thought about the markets moving forward here?
Well, we've said for months on your program that yields had to come down, and we still think they're too high. We still think the actual carryout number is probably closer to 1.5 billion bushels, not 1.7. So, that's not running out of corn. And remember, that's not today's supply. That's the supply that would be available in July, August of next summer before the next harvest comes. But, remember, we started the season at 3.4 billion bushel carryout expectations. And now we're on our way to 1.5, 1.7, which, we talked about this on this program, that's kind of where we're going. And so the corn market keeps ratcheting it up to reflect a much tighter market. But, certainly there's enough corn to get the job done. So long as South America's weather is sufficient enough that their second crop corn, the safrinha crop corn that they plant in January, February, can be sufficient to provide, large exports to the rest of the world. And so that's really, I think the focus is going to kind of shift from U.S. balance sheet, U.S. demand, U.S. Production. I think the market realizes that, we're just a whole lot tighter than we thought. And now it makes the weather in South America extremely important. And the thing is, we don't need a terrible crop down there. We just need a crop that's just not quite as good as it normally is. And with our carryouts being as tight, that would be enough to probably concern the market as we move into our growing season. And as you know, Casey, we're not expecting very good weather for the U.S. in the spring, summer, fall timeframe coming up. We're expecting a lot of problems with our crop potential. So, we think we're just in we're in a repricing environment right now, and but there's going to be pauses. There's going to be corrections, as you said, profit taking. we probably have done enough for now, and Mother Nature in South America will not reach what we consider to be definitively mission critical until mid-December. So this would be a period that grains could probably pause, go sideways, have some corrections. There probably is not going to be a whole lot to drive the market here over the next 30 days, Casey. And so this does look to us to be a period of correction, kind of a pause, kind of a let's let these moves absorb a little bit and see what happens, and we'll keep an eye on South America. So we think for now, the upside is probably going to be capped for a little while.
Yep.
So
if you take a look at South America, that was what I was going to talk about next here. So South America is setting itself up to be kind of all eyes are on it right now. There's everything from where they're at now in the growing stages, all the way through, the January, February, early March time frame during harvest down there. A lot of stuff is going on. The dryness that they're seeing, some of the rains that they're supposed to have gotten, either didn't come or weren't what they thought they were going to be. So they're in a bit of a pickle down there when you start looking at the overall conditions that they're sitting at right now, and so you're starting to see a pretty rapid weather market develop, right? And it's across the board, whether you're talking about wheat in the wheat belt here, or the Black Sea regions, Australia, those kind of places, or what you see happening down in Brazil, Argentina. Plenty of craziness going on there. I mean, at what point has the market already built in a quote-unquote weather market into those numbers, or are we just now getting to that cusp of that weather market right now where guys are saying, this weather thing's a bigger deal than we thought it was, we need to start paying attention to that?
Yeah, I don't really think we've priced much weather in yet, Casey. This whole move higher has been a repricing due to a dramatic change in the U.S. supply-demand perception or view. I mean, we've been just repricing because we got the market got the U.S. supply totally wrong, like just totally wrong. Mm-hmm. And so that's been what this market move has been thus far. I do not believe we've priced much weather in. As I said, I think we're going to transition now to monitoring whether we are going to have the next leg up, Casey, is a weather market. That's the next leg up. And that really will happen from if this dryness that we're seeing, especially in southern Brazil, where 35% of the soybeans are grown, and in the grain belt in Argentina, where they grow a lot of corn. If this dryness persists into mid-December, think of that as our mid-July. Okay. Then the market's going to have to make another reaction to potentially much lower export supplies coming out of South America at a time when the U.S. is starting to lose its capacity to fill up any gaps. So that's why I'm saying I think we have a window here where the market's comfortable with waiting it out a little bit, making sure, because maybe the weather turns out better and everything's fine. But I think they're willing to wait for 30 days or a month here to just let things play out a little bit before they want to take these markets up another notch. Ultimately, we think that there's going to be enough drought issues in South America to warrant some kind of a weather move, whether it's an explosive weather move. We'll just have to see it. The La Nina is not as definitive in South America as it is in the U.S. or as it is in Russia. It's a little more spotty, especially for Brazil. So if I were to look at the areas that I have the greatest confidence in our weather outlook, how we do things with our natural climate cycles, I would say Rio Grande do Sul, that southern Brazil area, and Argentina are your highest correlations to having what I would call some pretty impaired crops due to drought. Everywhere else in Brazil, I think it could be okay. Not top end, by the way, but I think it could be okay. So the market's going to have to monitor, that mix and determine whether, to what degree we need to reprice further based upon that. So.
Okay, so let's fast forward and take a look at what that January report might take a look at now, or might look like now. The USDA has done a good job of ratcheting back the stuff they're talking about. Lots of private estimates out there that are saying that the export balance sheet doesn't quite match what the USDA put out and what they're talking about. So we're seeing some discrepancies there, at least, but these private analysts put stuff out all the time, and you wonder where they get it from. But the balance sheet part of future exports is something that doesn't quite pencil out the way the USDA has it figured into carry out and exports and those kind of things. So I guess as you take a look at that January report when it comes out, which will be a big one, what's your thoughts there?
I think they made a comment a couple of weeks ago in reaction to this criticism, that they have not factored demand into where many of the private analysts suggest they should. And they made the comment that, the history of Chinese buying is that they have a tendency to cancel orders.
Right.
That was a direct quote from the USDA. Mm-hmm. Now, do they know some orders are going to be canceled, or are they just assuming that a normal amount of order cancellations based upon historical precedent? I don't know. But I think that they're using some kind of historical model that says, normally when during the season, we 3% of the orders get canceled. I'm just throwing out a number. I'm not sure what the number is.
Right.
And maybe they're factoring in, but of course that assumes that South America has good crops and that they can export what the USDA is expecting them to, which once again goes back to why the weather in South America is so important, because if they come up short down there, then almost assuredly the USDA's demand side estimates are too low and they're going to have to ratchet them up. I think they will ratchet demand up a little bit in the January report. I think they need to. But they probably still won't make the private analysts happy. They probably still will not move them up as much as the private analysts are thinking they should. But I do expect a bump up in that demand, because I think the numbers are so strong that even if you factor in normal cancellations, I still think they're too low, Casey. Still think they're too low.
Yep. Well, there's a lot of moving parts there, and I'm pretty anxious to see how it works, because this is the first harvest we've had in a while where by the time the January report comes around, there's been 30 or 45 days worth of data collected up to that point. So there should be a lot of really good information out there, especially when you start looking at carry out and you start looking at, ending stocks and those kind of things. There's going to be a pretty big amount of information there.
Certainly on corn. I mean, if they're truthful, the corn yield needs to come down.
Yep.
Another 1 to 2 bushels to the acre. In our view, it has to come down. It should come down. And so I would be more looking at the corn market in that report for a surprise. I think the soybean yield's where it needs to be. I think they need to bump up the soybean demand. So if we're looking for soybeans, we'd be looking at demand to bump up and that carry out from 190 million to come down even lower. But I think the bigger story would be corn yields coming down another 1 or 2, because if you do that and you bump up demand a little bit, you're at 1.4, 1.5 billion bushel carry out, and 1 billion bushel carry out is about minimum pipeline level for corn for the U.S. to operate normally. That's not a lot of wiggle room. Not a lot of wiggle room, especially if we get any kind of problems with our crop this coming season. That's going to be wiped out in an instant if we're concerned about our crop potential. As I think we're going to. So we really have very dynamic markets here, Casey. This for the first time in a while. You could look around and say there may not be enough acres for there's not enough acres to go around to make this work. And we haven't had the ability to say that probably since 2010 or 11 is the last time we could say, I'm not sure there's enough acres to make this work this year. Yeah. And that's a good place to be, especially if the producer is storing as much grain as he can in the bin and only sells what he has to survive and only sells what he can't store. Said this on your program for weeks and months, and I'm going to say it again. This is not the year to be doing your normal marketing program and going out and selling next year's crop. This is a year to hold back, store the grain, sell what you have to, but we would continue to use your storage, your supplies in the bin as a very strategic asset this upcoming growing season. So
yeah. Well, it'll be interesting to see how things shake out, Shawn. We've got a lot of stuff coming, and when Aaron Fennell and I are talking about what's going on and stuff, I always bring up the your Sunspot Grand Solar Minimum speech that you gave at the Moving Iron Summit last year, and he gets kind of gets pale and he gets kind of sweaty and starts swearing a little bit, but for the most part, there's you're right. I mean, the way things are shaping up and the lack of moisture we're seeing right now is especially here in the U.S. It's not necessarily a very wet time of the year for us anyway, but it is abnormally dry, and there's really no relief in sight, and we'll see where it goes from there.
Well, just look at what's going on in the world, right? Drought in the U.S., drought in Russia, biblical rains in Central America, biblical rains in Southeast Asia, biblical rains in Asia.
Yep.
We have this dichotomy. We've talked about how we're going to have these extremes: drought, floods, record heat, record cold, right next to each other. This is all part of what we're going to be talking about on your next conference here in January about what's causing this, why it's going to continue and actually get worse as this grand solar cycle effect accumulates and continues to deliver more of this kind of weather volatility. It's happening. We're seeing it right in our front of our eyes, and it's going to create fantastic opportunities for producers to cash sell their grains, and it's going to provide fantastic opportunities for livestock producers to cash buy their feed, because we're going to have, with the record weather volatility, we're going to have record price volatility. The trends will be up, but we're going to be all over the lot. And so I much rather have a market that does that than a market that did what it did 3 or 4 years ago, where we had 50-year lows in price volatility. When it doesn't move, you have nothing. There's nothing you can do to make a better lot in your life as a farmer and a producer. So I'm thankful that we're going to get opportunities to do things, so long as you keep a level head. You can't get too excited. There's going to be a time to sell. There's going to be a time to buy, depending on what side you're on, and make sure that you're able to do that in the heat of the moment. That's going to be the hardest thing to do, because when corn's breaking through 6, for example, you're going to have to probably sell some corn even though you don't want to.
Yep. Yeah, it's going to be an interesting time, man. So, well, Shawn, that's good stuff, man. If folks want to reach out to Hackett Financial and get some more information about what it is that you're doing over there and how you could probably help what they're doing on their farm or in their investing needs there, what's the best way to get a hold of you and talk about those things?
The best thing to do is to go to our website at Hackett, Hackett, advisors.com. Probably the best thing to do is to pull down our sample report, which is, by the way, our latest weather report that we went over a lot of these things that we talk about with the weather, because that really is the most important thing to get your hands around. And I think that would be a good report for people to kind of get themselves familiar with what we're doing, to see if that might be something that might be of value to them. So
outstanding. Good deal. Well, Shawn's going to be, like we were talking about earlier, Shawn's going to be at the Moving Iron Summit in Nashville, Tennessee, January 20th through the 22nd. He'll be giving a talk on what he sees as far as weather modeling goes going through 20 and 21, and how that weather pattern is going to be dramatically different than what we've seen in the past. And it's a great talk. We've talked about it extensively here on the podcast when he's on. We've done some special shows just around those things. So Shawn's a wealth of knowledge, so looking forward to having Shawn come back to the Moving Iron Summit in Nashville, Tennessee, January 20th through the 22nd. I am Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. This is where you get all the information about the podcast and any blogs that I write. I'll get posted there. Also go to movingironllc.com, where you can find all the information for the Moving Iron Summit, as well as any blogs or podcasts I have posted there as well. Global Ag Network's a great place to find some other ag-related podcasts, so make sure you check that out. Go check out the Dryland Farmer Podcast with Brent and Landon. The guys will keep you entertained throughout the day. So with that, I am Casey Seymour with Shawn Hackett. Let's go with some iron, folks. Out.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here.